We, of course, will talk about ADP and our second of three jobs numbers. We will talk about homeowner equity and what might happen going forward. But first, folks, I want to have a discussion about landlord insurance policies. I know this might be a niche product, but it is something my audience cares about a lot. I don't know if it's obvious to you, but one of the things that I do on this channel as it grows subscribers, as it grows influence, is I am always looking to find relationships that benefit our community. For the last year or so, I have been trying to find an insurance policy or an insurance provider that would help and focus on landlords. Unfortunately, the insurance industry is a lot like mortgage in that licensing and other activity is very much controlled by the state. So where I could find a good California broker or a Texas broker or a Florida broker, I was not having any luck finding a national solution. Well, thanks to the CEO of Himlane, Dana Dunford, our Thursday guest, she has made an introduction to a CEO, Darren, who you will meet this evening at 5 o'clock, from a company called Steadily. Steadily. And they promise to be a platform for mom and pop investors, specifically focused on residential 1 through 4 units. They will go as high as 10 units. So again, very focused on mom and pop landlords. They promise better, faster, cheaper. I've only had my first conversation with Steadily, again, with Darren, the CEO, video out tonight at 5 p.m. Pacific. But I did put in the link in the comments, a link that I would ask you to try. If you are a landlord and you have an insurance policy, great. Do me a favor. Go to the link that I just gave you and put in the address, and let's see if Steadily is what they say they are. They promise, again, better, faster, cheaper. If you are interested in real estate investing and you're building your buy box and you're running your numbers, go to the link again in the comments and just put in an address. Get a ballpark number of what insurance costs. If you are a landlord and you already have policies and you're coming up on renewal, go to the link. If you get a cancellation, go to link. I want to know from you, does this solution fit the need of my community? So again, I put the link below. I would ask you to give it a try. Just tell me what you think. Leave comments below. You can see the video tonight at 5 o'clock with Darren, the CEO. And let's see if we have found a solution for all 50 states for landlord residential insurance policies. Again, I'm trying. It is a very fragmented industry. It took Steadily 4 years to earn the approval in all 50 states, but they are there now. So again, I put the link below, click on it, just test it out, see how easy it is. Again, you do not have to wait for renewal. Dion is absolutely right. If the platform provides better, cheaper insurance, you could switch today and you will cancel the other policy and get a refund. So again, folks, I am not asking you to buy insurance and anything with Steadily. I just want to know, are they filling a need? Did they promise better, faster, cheaper? Today, when I get a cancellation or I need a new quote, it takes weeks. And the quotes are stupid high. So Olivia and I are taking some fourplexes and duplexes and houses, and we are doing our own review of Steadily. But I want a broader audience to just give it a shot. Put it in, see what happens. No, you don't have to buy squat. Let's just test the platform out. So give it a look. Yesterday, folks, you know that Casey from Brick by Brick and I had a conversation about Memphis real estate rents, single-family homes falling 10%. Well, folks, just in the last 24 hours, I have heard folks from Texas, Arizona, Pennsylvania, California, Louisiana, and Georgia that rental units are taking longer to fill and rents are falling. I've seen numbers of 6% to 12%. Again, folks, what do you do with this information? Run more conservative numbers. Why are a lot of the syndications going to blow up? Because they didn't have good numbers. They assumed stupid things like 5% rent growth for 5 years. Not happening. We have seen an artificial bump in rent growth the last 2 years that is not sustainable. And we are seeing some of the markets, and perhaps a lot of markets, give that up. This is another reason why inflation should be falling. If you know anything about CPI, you and I both know that shelter inflation has been running at about 5.5%. It is out of date, miscalculated, a broken number. And now we are hearing about all-out rent declines. So again, please run conservative numbers. All right, folks, we got our second of 3 employment numbers yesterday. The JOLTS report, job opening surprise to the high side. We're talking over 8 million when there was expected to be 7.6. Today we get ADP private payrolls. Private payrolls was expected to be 128K. Last month was 103. What happened? Another large beat at 143. So again, what is that? That's a beat of 15,000. It looks like the growth was across industries, leisure and hospitality plus 34, construction plus 26, health services plus 24. When you break out the 143,000 services versus goods, you see that services were 101,000 and goods were 42,000. Again, we are seeing growth in the employment numbers. The big number, of course, is Friday. Non-farm payrolls. Current expectation is 150,000. So again, very interesting. With the latest jobs numbers, it looks like the call for rate cuts is changing. The market now is currently pricing in 25 in November and 50 in December. I will, of course, stick with my call from the Fed day, that first Wednesday, and say they're going 50 in November. I, of course, like to stick to my guns. Get it right or get it wrong. We will all learn together. Looks like we've got some new data on mortgage demand. Mortgage demand, purchase applications up for the 6th week in a row. Folks, this is supposed to be the slow season. We are seeing mortgage purchase applications up 6 weeks in a row. We could see this rolling recession that has decimated the real estate industry slowly starting to turn around in this part of the industry. We also have mortgage refi demand down week on week, down 3%. Remember, last week was up 20%. But when you look at year on year, we are talking up 186%. Again, I'm calling it right now. We are in the midst of a refi boom, which I've called for weeks now. The mortgage industry is clearly getting out of the depression it's been in for 2 years. I don't know if the real estate industry has the same oomph because, again, they don't really benefit from the refi boom, but that is interesting. Something that I've looked at and I've been concerned about, and I think could really lead to a soft landing or a no landing, if you will, is homeowner equity. Again, we've talked about the fact that our economy has 2 types: asset owners and asset renters. If you happen to be in the camp of asset owners, you are doing better than asset renters. You are currently sitting on a collective total of 35 trillion. I can't even fathom that. 35 trillion in tappable home equity. What I think about this is when or at what rate or if we as consumers go back to our homes to consolidate debt, bring down interest rates. Again, I think there is a lot of refis being done today that are horrible for consumers. But if rates continue to fall and we get something in the low 5s, there's a lot of equity out there that will clean up the balance sheets. What do I mean by that? According to some numbers I looked at, there is currently $1.14 trillion in debt on high interest credit cards. Again, if you're sitting on 35 trillion in homeowners equity, if you are an asset owner versus an asset renter, you can, in theory, pay that off and consolidate. Then I look at auto loans. Auto loans currently are sitting at 1.63 trillion. Again, asset owner, asset renter. Asset owners have options. Renters don't. This is the key to getting wealthy, folks, is you gotta struggle, sacrifice, get on the, play the game, own assets, inflation's your friend. All of these things that we talk about, the numbers should be obvious by now. Whatever you can do, you got to sacrifice. It's hard. It's always hard, but it's worth it. It's worth it. I've done some look into this port strike on the East Coast, and I think a couple of things are interesting. Did you know that the port workers apparently are negotiating for a 70% pay increase, plus assurances that automation will not wipe their jobs out? I don't know if you've seen this, but it looks like the guy in charge of the union makes almost $1 million a year, drives a Bentley. Certainly not the struggling longshoremen that I think about when they go through these negotiations. It is pretty wild. Port workers have been offered a 50% increase in pay over 6 years. But yes, we are on strike. And according to the leader of the union, they want to cause pain, which is a horrible thing to think about, especially given the disaster that has happened to the East Coast with this latest hurricane. There's a lot of supplies, a lot of people in need, and a lot of stuff stuck on containers. Hopefully this thing is over very quick. Again, I think we talked about it yesterday. Every week that this goes by, it's a hit to GDP somewhere between $3 and $5 billion. In case you're wondering who might be impacted most, I do have the top 5 list of importers. Walmart, IKEA, LG, Samsung, and a 5th one that I would have never guessed, Bob's Discount Furniture. Yes, apparently Bob's Discount Furniture is importing a lot of goods. And they're the 5th largest one. Pretty interesting. Goldman Sachs, again, says that the 2-week port strike could be a negative 0.2% hit to GDP. If it goes longer, you will see a $45,000 hit to the payroll in October. At the end of the day, folks, I don't know how you fight automation. I don't know if you've seen these online about what does a shipping yard in China look like versus what we have in the US. I think a raise is warranted, right? These individuals operate in 6-year contracts and have had no raises, so they deserve one. I think it is very interesting to fight automation. It is very interesting to fight automation. That seems like a no-win situation to me. Again, what else do we have here? We do have some auto demand. Stellantis. Auto sales in the U.S. down 19.8, let's call it 20% year on year. Ouch. Tesla reported delivery numbers that had a very small miss. Expectations were 464. They came in at 463. Nike had some disaster earnings. They obviously now have a new CEO. They've withdrawn guidance. They've shut down the investor day, missed on revenue, and expect the current quarter to be down 8 to 10%. Lastly, folks, let's congratulate David. David, you joined our amazing school community yesterday. You've already introduced yourself to the community, so you're way ahead of the game. Folks, it is time for you to join One Rental at a Time on School. It is $20 a month. It is Q4. Join the accountability groups. We do have an accountability group today led by Frank Old Guy REI. You got another one on Sunday, another one on Monday. Again, you got a lot of thousands and thousands of dollars in courses. You got the 10-week boot camp, seller financing, buy box, all of those things for you to do. But most importantly, by joining my school community, you will be around 283 other investors going the right direction. We've got builders, we've got short-term rentals, we got midterm rentals, we got out-of-state, in-state, big, small. You want to be in this community. You want to introduce folks. You want to do all these things. So lastly, going back to where we started, do me a favor. Test the link that I posted steadily. According to Darren, the CEO, they are better, faster, cheaper. They are only focused on landlords, no owner-occupant, no commercial. They are filling a need for us in all 50 states. I want to know, by you testing it, if I should grow this relationship, if I should invite Darren to come back weekly. Again, I don't have to. I have a lot of people that come to me. My thinking is if they are 70% of what I heard Darren talk about, I think we have to add them to the weekly Rolodex of interviews and guests. But I won't do that until I hear from you. So again, click the link, test it out, get a quote, see how it feels, leave comments below. All right, folks, take care. Don't forget the accountability group today. Don't forget to join school. It's only $20. We are currently the third highest rated real estate investing group. I want to be number one, so I have to continually add value. Got to continue to grow the group, continue to be the person that's orchestrating all of this. I will talk to you tomorrow. Take care. Later.